Let's bring in Tobias Levkovich, Citigroup's Chief U.S. Equity Strategist. He is out with a big new call called Vision 2020. And get this, believes the market, the Dow, will hit 30,000 by the end of next year with a $3,300 target, of course, on the much more widely watched and followed by the pros, S&P 500 by the end of next year. Tobias, great to have you on. Bold call. We like it. You know, I think Brenda brought up the key point, at least to me, looking at the market, which is that, is there part of your thesis, which is that simply the pool of investable assets continues to grow, but the amount of stock in the United States continues to shrink, and so you got more people and more money simply chasing a smaller pool?
Well, I'm not as convinced of that particular aspect. I think it's more around, we're going back to this idea of China, or there's no alternative. A lot of investors don't necessarily want to put their money into treasuries at 1.6%. You got dividend yields of 2%, for example, in the S&P. And you potentially have some growth in earnings. What's been really fascinating about the market is how almost closely aligned it was with earnings. As we started to see earnings slow in the fourth quarter last year, markets kind of perceived this as being a problem. And if we get some acceleration next year, nothing dramatic, but some acceleration from, call it 2% this year to 4 or 5% next year, that's still better than a poke in the eye. So I have an appreciation for the idea that there's, kind of fewer stocks out there. But at the same time, you continue to see on a net basis, so you look at both ETFs and mutual funds, on a net basis, money flows coming out of U.S. equities, with the only real buyers being corporates.
Okay, so you point out in your note, you said, listen, here's our forecast with sizable caveats. I think that's your direct quote. So what is the single most bullish argument you've got, Tobias, and what is the most bearish argument that you may have against your own call?
Sure. So look, I think the most interesting element is investors aren't particularly excited about stocks, despite what we were just talking about before. So investor sentiment is still quite cautious. Our panic euphoria model had been very close to panic 2 weeks ago, yielding about a 95% probability of markets being higher a year from then. And in that sense, every investor we talk to just feels deeply uncomfortable. And it might be because they're worried about trade wars. They might be worried about, as of the last couple of days, news of the president and will he be the president. It might be about inverted yield curves. Whatever cautionary issue you're kind of dealing with, it is keeping investors from being excited about being, only a few days ago near record highs again. So that's part of it, and kind of our analysis on how that impacts behavioral finance and how it impacts the markets. That would be one of our more powerful arguments. I think the thing that I'm most worried about is people look at the shape of the yield curve differently than we do. We use it as a metric in terms of looking at what is its lead indications about volatility. And it does suggest late next year into 2021 that we're going to have a more volatile period. If that's the case, what's the drivers? Potentially economic. Do we potentially have a recession late next year into 2021? Or the U.S. presidential elections and who might win? And we're kind of the mindset that if President Trump were to win re-election, there might be some concerns about him saying, hey, they like what I've done, they re-elected me, let me double or triple down on some of the more controversial aspects like trade and go after potentially other countries. And I'm not sure the business community or the investment community will be that excited about it. On the other hand, if you get a Democratic challenger win, a lot of the proposals being talked about, higher taxes, more regulation, also might not be well received by the markets. So I think that element of likely volatility because of potentially different outcomes is where I probably have the greatest discomfort.